session. But let's focus in then from one corporate to another, and Equitas in the limelight as the company came out with their Q1 update saying that their overall collection efficiency has improved. The company has managed to outperform small finance banks as well, and Mr. PN Vasudevan, the managing director and CEO, is here to discuss the road ahead. Thank you so very much for taking time out. To begin with, what has really been the impact across the microfinance, small business, vehicle finance in terms of on customers that you've observed, largely on account of the pandemic and the second wave in particular?
Hi, good morning. So the second wave impact on business has been much lower than the first wave. I think largely because of two reasons. One is the longevity of the period. The first time we were all locked down for nearly about 5 to 6 months. And this time it's been probably around 2 months. Second thing is also that I think people have got, kind of adjusted to this, and we don't know how to manage our life within the pandemic, situation. In terms of our business, microfinance contributes about 18% of our total loans, and microfinance, has the one which has also come up in terms of collection compared to the other months. But it's been slower, and that's largely because in microfinance, we have to have a group meeting, and that is where we either talk to them, communicate with them, or make any collections. We don't do it directly at an individual level. So if a group meeting is to be held on, let's say, 5th June, and 5th June is a lockdown, and 6th June, let's say the government opens up, we cannot actually go back to that group on 6th June. We'll have to wait till 5th of July to meet them. So that is a construct of the product. So there's always going to be a little delay in coming back of customers in microfinance. But our other business, which is the small business loan, which is about 45% of our book, that's come up very sharply in the month of June because West and North were completely opened up. South was still opening up through the month. But overall, it's come up very well. And vehicle finance also has come up pretty decently in the month of June. And hopefully with the lockdowns not there right now at this point in time anywhere in the country, we hope that the trends will continue to improve further as we go forward.
Okay, fair enough. Going forward then, give us a sense as to how you're seeing each of the segments that you're operating in shaping up. As you spoke of the difference between the first and the second wave, so now do you think that there are fairly incremental signs of normalcy kicking in to your individual segments?
Basically all the customers that we have now in different verticals like vehicle finance, commercial vehicle finance, basically small business loans and our microfinance, we had the last year pandemic, and we did have certain level of write-offs and NPA in the month of March for the last year. And all the customers who are now there on the system, who are standard customers, have actually gone through that entire pandemic of 6-7 months of lockdown, and then come back and paid the next 7 months of EMI starting from September of last year. So these customers are kind of, you can say, stress-tested customers, so to say. And that shows that their underlying business has some level of resilience, which is able to help them come back. And commercial vehicles, by all trends, looks like the commercial vehicle market should see some uptick, especially from the second half of the current financial year. There's a lot of expectation that the CV business should see an uptick, so we expect that 25% of our book should perform well. The small business loans has been always resilient. We have never seen an issue in that segment, whether it was demonetization, then the GST introduction, and then the pandemic. We always seen the small business loans being always very, very strong. It's microfinance where always the concern is high because they are the lowest end of the customer profile. Their income levels are the least amongst all our borrowers. And we got to be very closely working with them, supporting them through any kind of market dynamics to help them to come back and get back to their normal lives. So that is always going to take a little time, but the rest of the business, I think, should come back very, very sharply.
Sure.
Mr. Vasudevan, just an extension to the point that you were making, your business update for the first quarter mentions that your collection efficiency has certainly improved in June versus what you saw in May. Tell us a little bit more about the efficiencies in collection across the states and segments, and which segments in particular do you see a stronger recovery as opposed to others, and which are the ones which are still under stress?
If you see in the update that we have given, if you see table number D, that's the X bucket efficiency. X bucket efficiency really means people who start the month without being in overdue, and then how many of them have paid through the month that particular month's EMI installment. That's the table D. And if you see, small business loan, the percentage is as high as 96%. Vehicle finance has come up to 91.5%. Compared to 78% in month of May. And as I mentioned earlier, microfinance is the one which is slightly, the turnaround is a little slower. It was at 74% compared to 69% of May. So basically, as I was saying, the expectation going forward should be that microfinance will come back probably in the second quarter, while the other business should come back to pre-COVID levels, I think, very fast.
Okay. Your business update also mentions that you anticipate a sharp improvement in collections in the coming months as the COVID-2 recedes. What is this improvement a contingent of?
Basically, it's contingent on the spread of any potential third wave and any particular disruption that it might cause. Right? It's basically contingent on that. So if for a minute, if we can kind of assume, and of course we are all praying for it, I'm sure, but if we can assume that there is no significant third wave in the country because of various government initiatives, mass vaccinations and herd immunity, if there is no third wave, or if there's a very small third wave, not very strong, then I think our businesses will come back very, very sharply and in very quick time. So I think it's really based on that. It's really contingent on that. And if there is no disruption, I think we should kind of see a very strong second quarter for this year.
Yes, indeed. Fingers crossed. And, all banks, Mr. Vasudevan, have reported a decline in their disbursements on a QOQ basis, including Equitas. So for Equitas, is there an impact on demand, or is it a conscious decision to go slow when it comes to lending in this environment?
April month, our disbursement was quite normal because, in April, there was lockdowns in parts of West and North, but South was having practically no lockdown at all. And we have a major presence in South. So our April disbursement was very, very, very normal, more or less near to normal. May, we saw a lot of lockdown everywhere, and then June slowly opening up. So that's why our quarter-on-quarter disbursement is about 50% of the March quarter. Of course, it's 125% of the last year first quarter, but that's not really comparable. Going forward, the kind of segments that we lend to, these are segments which are marginalized or which have been excluded from the formal financial sector for the last about 70 years post-independence. Just to give you one small highlight, in the small business loan or in the used commercial vehicle loan that we give, nearly about 85-90% of our borrowers are first-time borrowers from a formal sector. They have never borrowed ever from any bank in the past in all their lives. So that's a kind of the level of unmet demand which is there in the excluded segment in the country. So there is never any real issue on the demand part of it at all. The question is only that how much are we going to lend? May and June, because we were under lockdown, so we couldn't obviously do much on the field. So July, we should be restarting again. So as far as disbursement is concerned, I think it's just a question of how much are we allowed to go out into the market, how much the customers are allowed to open their shops. I think it's only a factor of that. The demand always remains very, very high in this segment of the market.
And given that, the company has gone ahead and outperformed peers like Ujjivan and Au Small Finance when it comes to the casa ratio, deposit, as well as your loan growth, what has led to this kind of an improvement, and do you believe that it is likely to continue?
See, on our deposit front, yes, I think we have done reasonably well. This has been an effort that was started more than about a year and a half back. It's a kind of result of all the efforts put in there. We have introduced a few new products. We have introduced, HNI product, super HNI product called Equitas Elite, which is a 25 lakh relationship value product. And that's been really doing very well over the last maybe about 3-4 quarters. We also introduced a lot of channels, and one of our important channel we introduced last year pre-pandemic was our digital savings account product, which is called Selfie. So effectively what we can say is that there's been a lot of progress in terms of both product introductions as well as channel introductions, and it's been a cumulative result of all those efforts that we are seeing on our casa. Of course, we do offer a higher rate of 7% for one particular balances of savings. Outside of that one particular balance, the rest of the rates are again either at 6 or 5 or 3.5. So it's been a combination of various factors. The overall deposit market has been good for all the banks, and I think we are also a very strong beneficiary of that market situation. And going forward, our effort will be continue to try and keep it as high as possible from a CASA ratio.
Okay, great to have you on the show, Mr. Vasudevan. Thank you so much, as always, for taking the time out and speaking with us today.
If we may just add one more point.
Sure, go ahead, please.
Yeah, so the ESG is something which has been catching the attention of all investors around the world and in India from a sustainability perspective. But I think the current times are really what we need is the vaccination. That should be the major focus of companies and investors. And I don't see much of a sound on that from the investors. And I think that's important that investors start asking companies what are they doing on mass vaccination of the population so that we get back to sustainability and stability quickly. And at least from Equitas side, we have been working with lots of state governments. We continue to do a large number of camps. We have conducted nearly 1250 camps so far, and about 1.5 lakh people from low income population as well as rural and urban, we have been able to get them vaccinated. I think that is one thing that we are not hearing much sound from the investor community, and that will help if they really raise the bar on that so that the country gets vaccinated quickly and all of us stand to benefit in that process.
Indeed, that seems to be the aim of the government. Mr. Vasudevan, thank you for taking the time out and speaking with us today.